be even more challenging. If you've heard about this $40 trillion debt bubble, well, that's the world that needs to refinance. And to the tune of about $40 trillion. It's not immediate. It's not just all happening in one deadline, but over the course of 2020 and 2021 and 2022, all post-COVID savings that everyone is able to borrow at cheap money before the rates started to increase in 2022. If you have, 5 to 10 year financing, that's coming due in these next, 6 months, 12 months, 24 months. And that's going to make things really interesting with how the world can refinance $40 trillion worth of debt. Could the can get kicked down the road? Sure. Could fiscal policy continue to outweigh monetary policy? Sure. We have central banks around the world that have been cutting rates all year. The Fed has not done anything. The Fed has gotten a lot of free mileage. We're still at all-time highs. We should be fortunate that we're at all-time highs. And meanwhile, I wonder, with the pressure that Trump is putting on Jerome Powell and potentially even throwing out, who the next Fed chair is going to be or who the front runners are, if the markets start to be a little bit more forward-thinking into believing that, okay, Powell's regime or Powell's tenure is up. What's next for this next Fed chair? Is the Fed going to be ultra dovish or uber dovish? And what does that mean for monetary policy moving forward? Does it even matter? Does it really even matter? I don't know. I really don't know. And so the reaction of, okay, August is potentially a lull, and seasonality wise, I don't see the markets going dramatically higher unless this is going to be a melt up into a September like fake out. We melt up into August, September, and then September is a pullback because of the Fed noise, because of maybe the shakeup of all this has been priced in, buy the rumor, sell the news. Market starts seeing that the Fed's cuts already been priced in. Boom, market fails, market falls. Am I bearish in the market? No, I'm not. I'm just looking for dips. Okay, if we start to go higher, 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 I'm still looking for dips to buy. But if we are stretching above 7,000, I'm going to be a little bit bearish going into 2026. So what I'd like to see, and I've been pretty vocal about this, I think that the pullback to the 50-day, pullback to this previous all-time high, pullback into any of these dynamic support levels is a good chance to take some bites and define risk trades into buying some of these dips, get back to these highs, and potentially push higher. So I'd like to see that through August, September, October, and hopefully give us a chance to participate in some dips and pullbacks and not just have a 3.33% correction is the only pullback you get after a bottom in April. Yes, we had a tiny pullback here when there was chaos, right? A little pullback here with a gap, and that was it. Like, that's it. So 3.33 to me is not really a correction. I think that we're still maybe testing highs, testing lows, maybe sideways, but the market probably uses that as a potential base, right? Little pullback, little side